Hi, it's Lee, and welcome to the Tech Economist. Yes, I know, Elon said that they are no longer working on a $25,000 car, and it appears that the new idea of an affordable car for the masses has been replaced with a purpose-built robotaxi, as that is, in effect, the lowest cost form of road transport, as opposed to actual cost of ownership. However, there are still many people continually talking about the idea of a low-cost Tesla that might cost in the range of $25,000 to $30,000 in order to really boost EV production. So how about we entertain this idea and see how much such a car might add to Tesla's valuation? Firstly, let's talk about the cost of building such a vehicle. This would be based on the new generation platform that Elon has told us about, a platform supposedly that reduces the cost of building an EV to half what it costs to build a Model 3. Half. Now that is a substantial drop in cost. Even if he's referring to the Model 3 in Fremont, then we're still likely talking about under $20,000. I'd estimate probably closer to $18,000. $18,000 to build an EV. No, not any EV, a Tesla, as we'd assume it comes refined with the typical Tesla features and meets the expected safety standards of a Tesla, despite being a smaller vehicle. Obviously, physics plays an important part when it comes to safety. A large car is always going to be safer than a smaller car, everything else being equal. But Elon says safety is Tesla's number one priority. But for example, the BYD already have an EV that actually sells for around $17,000. The BYD Dolphin, which is a compact BEV, they've shown it is possible to get costs down for a smaller vehicle. Although the BYD at that price has a range of low 100 miles. Again, being a Tesla, we'd expect a lot more range as it coincides with the brand. So if we're talking about a cost of goods sold per vehicle this low, then with a price tag of around $25,000, there's still $8,000 gross profit without any other features, which is also a 32% margin. This becomes somewhat ridiculous, really. Even if the cost ends up being higher and closer to $20,000, then the profit is still good, especially when we might consider just how many of these may be made, or how much demand there would be for such a vehicle. And no doubt they'll all have FSD and potentially a massive upsell there. I'd guess though, at this lower price point, fewer customers who order this car would be willing to pay or could afford an additional $15,000 for FSD. It's one feature that costs over 50% more than the initial car purchase. However, it's highly possible many of these drivers could potentially afford $200 or so a month for FSD. Anyway, when you factor in the fuel savings and everything else the Tesla offers, then it's probably closer to $20,000 car. Or wait, there are other savings here too. Well, surely this vehicle would also qualify for the tax credits. So wait, now we have a $25,000 Tesla that is at the cost to the consumer for just $17,500. This becomes mind-blowing. A brand new car that is incredibly safe with the most advanced technology compared to any other automaker on the planet. Okay, that's too cheap for a Tesla, and there's no way it will be that price. Tesla like to control demand with dynamic pricing model, subject to what is happening. When this car starts production, it could have an even larger backlog than the Cybertruck, and production will take a long time to ramp. Therefore, I would say the initial price is probably going to be somewhere in the low 30,000s. But I would also assume that the initial market will be the US, not China or Europe, despite the demand they have for compacts. I think there'll be more demand in the US, given there are the incentives. Oh right, also, let's not forget the subsidies too. I've been saying for some time that Tesla is likely to really double down in the US market for these reasons. So even if the car costs closer to $20,000 to produce, and Tesla are able to perhaps sell them for an average of $32,000 with an additional $2,000 in subsidy on top of that, in other words, that's $14,000 gross profit per vehicle, and then some FSD revenue on top of that, and other optional extras. The FSD revenue alone would be highly profitable over time. If the customer's paying $200 a month, after 10 years, it's about $25,000 profit. And perhaps this will be the car that has no steering wheel, or at least eventually, and you have no choice other than to pay monthly to use it. This starts to become totally ridiculous. What kind of demand might such a vehicle have in the US? Well, eventually, if it actually is around the $20,000 price tag, including tax credits, I think its main competition is likely used cars rather than new cars. There would be plenty of drivers that could justify buying a new, low-cost Tesla over a used car, or simply selling their used car and getting one, especially if their car is quite old and thus not very fuel efficient, out of warranty, and has expensive servicing costs. Although you've got to wonder though, just how long will the government be happy giving Tesla customers these tax credits? They're going to really start adding up. So perhaps the initial ones might be this lower cost, but I would say that they're going to eventually cut back somewhat. But either way, if Tesla are at a $25,000 price point, demand will be there. The real point is the low production cost. It's hard to just throw a number out there, but if Tesla are planning on ramping the Model Y production to around 1 million or so just in the US, then a car that is under half the cost should be in the millions, perhaps 3 or 4 million a year. When the price points get lower, the demand becomes exponentially larger. It would likely be using a smaller battery too, probably around 45 kilowatt hours, maybe even smaller. But if this is to be the lowest cost version, and Elon says 2/3 of EVs will be using iron cathodes, then is it possible that this will be using a Tesla LFP battery? Now that's the announcement I'm looking forward to the most from Tesla, when they announce they're going to produce their own in-house LFP cell. Anyway, if Tesla can produce cars for this lower cost, we should see perhaps an additional $10,000 per unit gross profit, including FSD adoption and subsidies, and able to achieve that likely even without tax credits by this stage. And if we have 3 million units a year, then that is an additional $30 billion a year gross profit. If such a car is made, or equivalent, then my guess would be it will be in the new factory likely to be built in Mexico. It sounds like it's going to be more of a terafactory than a gigafactory. It's going to be enormous. Large enough to build a factory with a capacity of a few million. I mean, look at the size of Giga Shanghai. That is small by comparison, yet has a capacity of over 1 million, only using rear castings on the Model Y. If we think about structural packs and front and rear castings, then the output will be even larger per square foot. However, we're talking about the next generation of platform, which many suspect might be using a single casting, and we're likely going to hear about it on Investor Day and discover the future of how cars will be built. If the battery is around 45 kilowatt hours, then a 100 gigawatt hour a year factory would be enough for just over 2 million a year. So in actual fact, an 150 gigawatt hour a year cell factory is probably sufficient for the numbers. Although I have a feeling that possibly this Mexico factory will have a massive 4680 battery factory. It's also reasonably close to Texas too, which is where Tesla's lithium refinery will be, which is an essential part to building more cells, what with it being the limiting factor when it comes to ramping batteries. Elon says they'll have this refinery operational within 2 years. However, I think we may need to add some Elon time onto that figure, as most experts in the industry say it usually takes 7 years. If Tesla can achieve it anywhere close to 2 years, then that is one of the biggest deals for this company, and means they're going to be so independent of third parties for ramping. It takes their vertical integration to the next level. Anyway, hopefully we'll be told more about this in the investor meeting in March. It feels like there's going to be something big announced. Even if it's not a $25,000 compact version, there may be possibly more information about the new platform. This could really take Tesla to the next level. I suspect whatever it is, it will be the equivalent to their Model T product, and likely the biggest selling vehicle in the world. If it is a robotaxi, then it would mean they're obviously very close to FSD. Of course, it would still be 2 years until these vehicles are coming off the production line in any decent quantity, and a lot can happen in that time with FSD. But perhaps if FSD is not ready, then it will be sold to the consumer as a compact vehicle, and later will be the robotaxi. Anyway, whether this will be a low-cost compact Tesla or a robotaxi, the real point is that if Tesla can truly get the cost down this low to produce an electric car, then I'm sure they'll find a way to sell it, with what looks like substantial profits. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.